Hi guys, Gail Sylvester here. Let's talk about your mortgage payment. When should you make that? Well, that's one of the big questions we get asked all the time. So, based on your pay schedule, is generally what I'm going to recommend. It's easier for budgeting. So, if you get paid every other Friday, set it up that your mortgage payment comes out every other Friday. So, that's a little bit per pay period as opposed to a large one at the end of the month or the beginning of the month. But again, it depends how you get paid. So if you get paid monthly, I'd recommend monthly. Or if you get paid on the 1st and the 15th, let's do the 1st and the 15th. But people will say to me, but Gail, if I make the payments every 2 weeks, I'm going to pay off my mortgage quicker. But not really. So, because that's really about budgeting, because what you're doing is you're taking the 26 payments that you would have over the course of a year. If you annualize that, so times that by 12, and then you just divide it by 12, that's your monthly payment. So it works out to be the exact same amount depending on how you do it. But if you want to pay it down quicker, then you're going to accelerate that payment. So what's going to happen is instead of say, let's use easy numbers, instead of making a biweekly payment of $1,000, then your biweekly accelerated payment might be $1,120. So that extra $120 every 2 weeks, that's what goes against principal. And that's what pays your mortgage down quicker. So it's not about just doing it weekly, bi-weekly, semi-monthly, or monthly. And by doing bi-weekly pays it off quicker. You have to accelerate that payment to have extra money going towards the principal. And that's how you pay your mortgage down quicker. So if you're just worried about budgeting and you want to set it up properly, I generally will always recommend to you do it against your pay schedule. Also have two bank accounts, even three if we actually really think about it. Have one for all your fixed expenses. So that would be your mortgage payment, your property taxes, your house insurance, car insurance, utilities, cell phones. That's a fixed expense today. So have internet, right? So have all of those get pre-authorized out of that one bank account. Find out what that amount is equivalent to per pay period. Transfer that money over per pay period, and then you know exactly what you're working with. And then that way, that's out, you've already taken care of those fixed expenses. The remaining money is your play money, for lack of a better word. You've got your entertainment, you've got your gas, you've got your groceries. This is how you know what amount you're working with. And if you really want to take it a step further, open up a savings account. Put a certain amount of money, like what do we usually say, 10% per pay? Pay yourself, put that into your savings account. Then you really know what you have. You've got your fixed expenses, you got your savings, and you got your play money, and you shouldn't have any financial worries or any concerns because you've taken care of it and you know what your money's doing for you. So if you have any questions about what we can do for you, book a time. Let's chat. Go to the handle chatwithgail.ca and book a time into my calendar. I look forward to talking to you. We'll talk soon.